My name is Gareth Soloway, and I was a losing trader until I mastered technical analysis. Logic and charts beat hype and narratives every time. Now I teach investors the same techniques that made me a multi-millionaire. This is my trading game plan. Good morning, everybody. Welcome to My Trading Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. Big day in the markets. Markets are down sharply as escalation in the Middle East continues. Iran sending drones that hit some embassies in the overnight in other countries. And again, the U.S. basically saying that this could be over a month-long situation and military action. Now, again, markets initially were hoping that we would see a short conflict, but again, it's looking longer. We now have Iran saying the Straits of Hormuz are closed, and ultimately the U.S. saying no, they're not. But this is the kicker. They are for one specific reason. The insurance that a ship needs to take on to get through the Straits of Hormuz basically make it unaffordable at this point. Therefore, no ships are going through. In addition, natural gas spiking higher. I told you just the other day I picked up a little natural gas. Well, guess what? Took profits on this morning, an over 10% easy win in just a couple days. So again, great trading opportunities. The charts were my friends there telling me to get in. And once again, some good profits had. Let's get into the market action this morning. S&P futures in free fall. You can see overnight just grinding lower. We did get a little bounce around 6 a.m. this morning, but we are already starting to come back down. And again, the fear here is very simple, folks, is that oil is spiking higher. Oil goes higher. What happens to inflation? What happens if this is a month-long situation? Literally, if you have the Straits of Hormuz closed for a month, it will take 3 months to get oil numbers back to normal. That means prolonged upside in oil. If we think about products out there, most products have oil in them, obviously gasoline for our cars in addition, and oil just in general. That means inflation goes up, and we're seeing that in the 10-year yield, folks. So keep that in mind. In fact, let's flip over to the 10-year yield. Look at the spike again in the 10-year yield. Many people would say, well, again, and I said this yesterday, well, generally yields go down when there's fear because everyone buys treasuries, the safe haven area of treasuries, right? And that forces yields lower. But in this situation, we're not seeing that. Instead, we are seeing yields go up, telling us that expectations for inflation are skyrocketing right now. So this is a big deal right here. Now, you do see the safe haven trade in the US dollar. No doubt about it. Now, for me, yesterday, I put this parallel on the charts for you guys. If we hit here, I think the dollar tops out and pulls back. Technical analysis tells me that. So for those currency traders out there, this would be the spot right up here around 99.60 to 99.75. It's also, as I pointed out yesterday, a classic double top right there. So that should be a great dual factor resistance on the US dollar. Maybe that insinuates that if we do hit it, there's a little de-escalation in the situation. We'll have to watch and see. But flipping back to the S&P futures, again, just off of the lows, the S&P is slated to open down 1.75%. So a big drop here on the S&P, and the NASDAQ is also slated down to open down over 1.8%. So this is going to be a mammoth gap lower on the markets across the board. For me, the big question remains, where are we on this chart today? Remember the level that we've been watching here and across on the S&P. This is at 67.90. Now, the kicker is this. In technical analysis, when you hammer a level over and over again and it keeps bouncing, what happens when it breaks? When it breaks, is it just a little drop, or is it a floodgate opening like a dam breaking? And the answer is it's generally a dam breaking. So watch this like a hawk, folks, on the S&P 67.90. Remember, intraday, it's not important. It's important the daily close. Watch today. Do we close below 67.90? If we do, we could see a waterfall event of continuation to the downside. By the way, we'll talk about oil's chart in a minute here. We're also going to look at gold and silver. Gold and silver are getting pummeled. If you remember yesterday, I warned that silver had to confirm the breakout. Otherwise, it would be a failed breakout, and the bear flag was still there. Today, silver down as much as 10%. Gold, same thing. I gave you guys at least a week ago 5,400 as the next resistance. It hit it yesterday, slammed down today. We'll talk about those charts in just a minute. Going to the NASDAQ here, folks. The NASDAQ will be opening sharply lower today as well. If it breaks this recent support around 22,300, there is downside to about the 21,800 level. That would be your level. Now, notice again, just like the S&P, you have this bigger parallel that has guided me to saying, all right, guys, be very careful. NASDAQ likely topped. This is, again, distribution, and eventually it rolls over. Same thing we saw on the S&P. We have the bigger parallel here, right? Going back to the COVID lows that I've been talking about for months at this point, warning that, again, markets have limited upside. This is, again, distribution. We see the rounded top right here, and if this breaks, that's where you get your next move to the downside on the S&P. Again, charts are charts, right? They're not 100%. There's no such thing in trading as being 100%, but it's about probability and keeping emotion void, meaning no emotion. Make the decisions based on pure probability, which is why the charts are so helpful to me as an analysis tool. All right, we looked at the 10-year yield up sharply. We looked at the dollar today up sharply as well. Let's go to oil. Oil spiking now at $77 per barrel. Incredible. We talked about the breakout yesterday above this trend line. I will be actually looking to short a little bit of oil right around $80 or above. Now, you might say, Gareth's crazy, but this is so crazy. Oh, my goodness, but anything could happen. Oil could go to 120. I'm even hearing on CNBC, $100 oil. To me, emotion. That's emotion. And again, what I look at is the charts. I look at the charts. Now, listen, I'm a quick trader, right? I'm in and out in minutes, or in the case of a swing trade, in days. But ultimately, I find my levels. I have a game plan, and that's what I follow. So I dip my toe in maybe at an $80 Pierce on crude oil if we get there. If it gets to 85, I can dollar cost average. Inevitably, my thesis is number one, charts. Charts are always number one. My second one is that there's only a certain amount of tolerance from the White House for oil prices going up. There's a midterm election. Again, most of us know that in November. You can't have inflation and oil at $100 a barrel. It's just not going to fly. So they will do whatever they have to do to bring those oil prices down at a certain level. So that's a secondary factor because it's not technical. It's more psychological, but it's still important to know. Okay, so on we go. Gold today. Look at this, guys. This was a fantastic call on gold. We talked about how this was your resistance level yesterday. It tagged it. If you looked at the video, if you looked at yesterday's My Trading Game Plan, we were trading right underneath or right at this level yesterday. And look at today, breaking this trend line. We talked about this trend line right here from this pivot low to this pivot low and right to here. It's now breaking. Granted, we don't know where this is going to close today, so we have to watch. But let's see if it breaks. Does it confirm tomorrow? I also told you about my downside near-term support, which was at 5,000 to 5,100. And look at what we tagged. Literally, we hit resistance, the level I gave you yesterday, hit my first support. Now, ultimately, what do I think is going to happen here? My guess is something like this, and then further downside on on gold. The only thing that would change my mind is if we break this level up here, then we go back to 5,600 and into price discovery mode. But aside from that, the charts are the charts. Just let them tell me what to do or what is most probable, and that's the play. Silver, same exact thing. Silver right now down 7.3%. Yesterday, we had a close above. I said, guys, watch. And this is, you can go back, and I love this about our game plans, right? The game plans I do, full record. You can go back to a game plan a year ago if you want, right? Yesterday's game plan, you can go and look. What did I say yesterday? I said, guys, we need to see if we confirm here. It didn't confirm, failed breakout, boom, to the downside. Biggest moves come from failed breakouts. What does this tell us? We are still in a pattern of ups and downs inside of this choppy bear flag. This is still a bear flag. So interesting, too, because the bullish comments on silver yesterday were incredible. And what I've noticed more and more is that when the comments on YouTube videos, whether it's the game plan or my personal YouTube, whatever it may be, when it's in one direction massively, like 9 out of 10 are saying Gareth's crazy, the odds of me being right are probably 90%. It's pretty incredible. I use that as an indicator. It is an incredibly good indicator, something that you guys can actually monitor yourselves. All right. Keep that in mind. Let's get into some stocks making moves. Then we'll touch on Bitcoin. By the way, I am very bullish on Bitcoin right now, just in the near term. But let's go to MongoDB. Look at the drop on this, down 27 to 28%. Huge drop on earnings there. Earnings were actually very good. But, and by the way, look at this trend line. Look at this. Look at that. That was, I mean, it's a great call of a high pivot right there. The stock is all the way down here at 237. But look at this level right down here at around 214 to 215. Major gap fill on MongoDB. If it flushes into there, I'm a buyer today of Mongo. MDB is the stock. And this level around 214, give or take, that should be massive technical support for a technical bounce. Target this morning reported earnings, great pop, and now it's giving it up. So again, you know, when a stock is basically now unchanged from yesterday's close right here, it's only up slightly. There's really not enough volatility for me to do anything. But look at this. This is a former trend line, and look at how beautiful that buy was right there. Incredible there as the charts, again, just guiding us to what was likely. Think about sentiment on Target down here. And we talk about sentiment, guys, right? So sentiment is emotion. And when you had Target trading at about $80, no one wanted to touch it. Yet, did it turn out to be a great buy? Yes, it did, because everyone hated it. Everyone was out of it. Not much more selling. And there it is. Expectations essentially are super low. Now you've bounced. You're not back to your highs, but you've bounced off the lows. So again, there's really no bias here, right? It's in between. It's not extreme to one direction. If it's extreme up here, then it's the bearish bias. If it's extreme, and this is counter trend trading, because what you're doing is basically trading against retail. I mean, this is what institutions do. One of my favorite things about the game plan is that I reveal this stuff. How do institutions basically go against retail and make so much money? This is how. They monitor these things. They have scanners for these things. Again, I'll do my best to bring you all this information in my trading game plan. SE, massive drop on this one here. Big drop today. And if we flip over to the daily chart, you can see, by the way, look at this former trend line right here. Look, if we extend this out, broke, retraced to the scene of the crime, rejected. Very cool. I mean, again, it's one of the reasons it's fun to basically put trend lines on your chart and leave them there, because you can see later on, wow, that level was a fantastic retrace to the scene of the crime. I didn't short it there. I wish I saw it. But again, look at where this is trading now, all the way down here. Now, as a technician, there is a lot of support down in this range. So again, I would be semi-interested maybe around this 85 to 84 level, 83 level right in here. Now, again, it's a little high risk. It could get as low as 76 to 75. But again, there is a fair amount of support on SE in this lower range. So something to keep an eye on there. Credo, this is, again, an AI-ish kind of play, software play. Down on earnings here a little bit, right? I mean, dropped here. Yeah, I guess it's down pretty decently here in the pre-market. Looking here at the chart, this has been a chart that's actually been pretty strong until more recently. If you're aggressive, the aggressive level would be a double bottom at 95 to 94. For me, I'm going to play it more conservatively right here at 86. This former pivot high right here would be my level there. All right, flipping over to Bitcoin. Bitcoin is down today on the day. Again, it's still kind of holding this flag pattern. It keeps trying to break out. If it can jailbreak here, you should get a big move up. I think, honestly, the more I think about it, number one, the chart's still very bearish. And I love the fact that there are so many bears out there. Excuse me, the chart's very bullish. But I love the fact that there are so many bears on Bitcoin right now, because the same thing can be utilized inversely, right? Use that inverse. Now, it doesn't mean it can't fail, right? But the beautiful thing about trading is we know when it fails, right? If you break this lower level and confirm, and basically at that point you're breaking this low here, well, then it fails. And it's a very easy stop out. You just say, okay, all right, on to the next one, on to the next one. There's always another trade, but the probabilities are favoring a breakout here. And if you think about it, what's going on with oil, with the Middle East, geopolitical, with the war, all this stuff, this is more reason, in all fairness, that Bitcoin looks attractive to me. It's an alternative asset where no country has dominance over it. And again, you know, it's much like gold. The only difference is gold has gone parabolic, right? Versus Bitcoin's down 50% off of its all-time highs. And so I do think that at least in the short term, there's an opportunity here on Bitcoin. Maybe I'll be wrong. We'll obviously know, because this isn't going to be on record forever. But I still am long Bitcoin myself, and I continue to like it in this general vicinity. All right, so again, we'll keep an eye on that. And just looking at ETH as well. ETH, again, same sort of chart pattern here. If we can break out, you get a big move up, maybe as high as 2,600. Then eventually, I think these all, and I want to be clear about that, is I'm not thinking Bitcoin goes back to all-time highs in the next few months, right? I actually think after a bounce, it actually goes even lower when more and more fear comes in the market, and people just have to start liquidating to deal with margin calls in stocks or other things like that. We're not at that point yet. But in the near term, I am bullish on that. I remain bearish on silver, unless it proves that it can break above 92, 93 and confirm. And on gold, I would short-term be bearish as well, although long-term, I love gold. Again, pullbacks are buying opportunities as long as the pullback is steep enough to get me involved in this. But again, folks, markets right now are in trouble, at least for now. We're going to watch the charts here going back to the S&P futures. We can take a look here. Great drop. We're down 1.8% on the S&P. Now, lastly, I do want to look at natural gas. Natural gas, I told you I went long just the other day. Look at the pop here. This, again, it doesn't even look like a big pop, but I already took profits on this. Take a look from the entry down here, 13% move. Banked it. Already out here. This was a smart money commodities trade we did. And again, we already banked this gain. And by the way, it doesn't mean it can't go higher. Natural gas could go much higher. But in 2 days, 13%, who am I to, look a gift horse in the mouth, as they say in the old adage, right? So that's important. All right, guys. So listen, wild markets, watch the levels. Remember, if the levels break, the waterfall begins. I will keep you posted as always. If you're in my services, you get videos pretty much every day or almost every day. Smart Money Stocks gets every day. You see my live portfolio in that, literally how many shares of XYZ I own, whatever it is, short, long, short, portfolio value in real time going up or down. Right now, I'm already up over 15% just since the January 1st start of that portfolio for 2026. Incredible stuff. All right, I have to get to my trading room, guys. Again, it's going to be a great day. We've been crushing it in there. If you do want to join, number one, you can see you have the thing on the screen right here that you can look at, or just go in the description, and there's a link for the live day trading room if you do want to check it out. Have a great day, guys. Great job. Let's keep making money no matter ups or downs in the market. Take care.